Emma, shall we start at 6?
I
see
lots
of people are joining.
Yeah. Just let's wait 6:02. Sorry, everybody, and thank you so much for joining. We are the FinTech Association of Hong Kong. Proudly to be here virtually. I could do a commercial.
Just a reminder, everyone, we will be taking questions from the audience. So if you have anything that you'd like to ask, please feel free to write them in the chat box, and we'll come to them at the end of our prepared questions. Thank you.
Cool. Shall we start, Kat?
Sure.
Yeah. Good evening, everybody. Welcome to this blockchain committee of the FinTech Association of Hong Kong. I'm Emma Pecenicic. I'm the co-chair of this committee with Kat Kukreja, my fellow co-chair. So today we are super excited to have a panel discussion on crypto adoption of institutions. More and more traditional firms TradFi are jumping into the space. Market cap is now at almost 2 trillion of assets. Large institutions are piling in. BlackRock CEO said, they're studying digital currencies and stablecoins just recently. More and more products coming to track, Bitcoin physical, spot physical Bitcoin products, or even more, or through futures. What are the type of institutions looking into the space? Do we see an institutional grade infrastructure and regulatory framework to make it happen? So with us tonight, I'm super excited to have Annabelle Huang, managing partner at Amber Group, Giorgia Pellizzari, customer success head at Trust, and Luc Froehlich, head of digital assets at Fidelity International. So welcome, guys. For our first question, I'm just going to ask you, to introduce your company and basically, highlight, the part of the business and how, how you handle institutional player in the field. So maybe, Giorgia, we can start with you.
Sure. Hi, everybody. Thank you so much for having me. Super excited to have this conversation. As said, I think we should have many of these because things change very fast in the industry. So I hope this will be just the first one of many to come. So let's talk about Trust for a moment. At Trust, I am head of client success, which means we take care of our institutional clients. In fact, Trust actually set out a vision of providing the best infrastructure for safekeeping exactly for institutional clients. So what we do is custody of digital assets. At this stage, almost 4 years from when the founders started out Trust, we have over 180 institutional clients located all over the world, more or less. We have under custody several billion US dollars worth, and we support over 200 different types of digital assets, that is including NFTs as well. We're very invested in that space together with Animoca, one of our lead investors. And we really look forward to continuing our journey with institutions. We speak to them all the time. And that's why it's going to be exciting tonight, because we get to share a little bit their view, their concerns, their challenges, but also their hope for the future of this industry.
Thanks. I go through the order. Luc, do you want to go ahead?
Yeah. Hi, everyone. My name is Luc Froehlich. So I'm with Fidelity International. It's an asset manager looking after about 800 billion of clients' money across equity, fixed income, multi-assets, private assets, and newly also on the crypto space. We have about 2/3 of our the assets that we manage that are linked to B2B or B2B2C activities. And when we talk about institutional clients, we would typically refer to pension fund or the balance sheets of balance sheet money of large corporation. It's not so in the family office space. They typically have their own infrastructure. And in terms of your point, Emma, for the traction from institutional clients, what I found pretty interesting and exciting also is that it's actually more the institutional client that reach out to us first before we had a solution for them. And another aspect that was interesting is that based on the discussion that we've had with institutional clients for the past 18 months, 2 years, the diversification aspect was an interesting one, but many of them were also simply looking at source of return. They had run their number. They have seen that by adding at least certain digital asset or crypto to their portfolio, they increase their Sharpe ratio, they increase their return. So that's one of the key drivers for them to approach us.
Thanks, Luc. Annabelle?
Yes, hi everyone. My name is Annabelle Huang, managing partner at Amber Group. Amber Group is Hong Kong-based and now more recently Singapore-based full-service digital asset service provider. We service both institutional players, and that became from the crypto native players to now increasingly so traditional financial institutions, as well as individual users as well. In terms of services we provide, including market making, liquidity provisioning, trading in general, asset management as well, borrow lending, financing solutions, so really all across the board. And we're looking at not just crypto tokens, as well as more recently in the NFT space as well. So really looking to innovate with the market. We manage about 5 billion in trading capital, and a large part of the increase in that also came from the institutional adoption, which I guess we'll talk a bit more later on. And a lot of our investors are also financial institutions themselves. We're more recently backed by Pecenicic, based in Singapore, and valued at 3 billion. And I think have had discussions with a lot of the panelists as well. I'm really looking forward to this panel today.
Thanks, guys, for that introduction. So let's start off by looking at the types of institutions that are coming into this space. Is this still what one would think about in terms of crypto hedge funds and regular hedge funds? Or would you say that we're moving now with large banks starting to request services? And then specifically, considering that we are in Hong Kong and we are the FinTech Association of Hong Kong, what do you see in terms of a trend line for Hong Kong institutions looking to adopt crypto into their portfolio? Let's come back to you, Annabelle, and then maybe Giorgia, you can give us your view.
Yeah, sure. It's an interesting question. So like I mentioned earlier, our quote unquote institutional client types has really changed a lot. 4 years ago, it was mostly the crypto native hedge funds, VC funds, some of the miners as well, who have inherent exposure in the market. But that has changed drastically over the last 4 years, especially in the last 2 years, I would say. A lot of the more traditional hedge funds, family offices, even some regional banks or insurance or pension funds, right, having direct and oftentimes indirect exposures to crypto digital assets in general. So now that we sit in Singapore and also look at the more global markets, I would say out of Singapore, you can see that DBS is already making waves into the space, building their own digital asset exchange and offering custody solutions. Similarly, a lot of US-based banks are doing that as well. I was actually recently in Latin America. In Brazil, also spoke to quite a number of regional banks and smaller sort of traditional brokerages who are looking to get into crypto. So this is definitely the trend. And I'll leave for Giorgia to probably talk more about the Hong Kong scene.
Thank you, Annabelle. Yeah, I definitely can share your experience, right? We have seen in the past, I would say, a lot of inflow of requests, right, from more traditional players. So definitely banks. We are in conversation with all major banks, licensed asset managers, insurance as well. I would say in many of these cases, the demand is driven actually by their clients, right? So as the space becomes more, more, allow me the term, not trendy, but, as more and more people get familiar and get more comfortable with the industry and with this type of asset classes, they then in turn go and ask their, financial service partners How can I get into that? How can you help me? How can you support me? Right. And as a result, these institutional players, they don't really know how to get around to it. And then they reach out to us. So very often what we experience is a very, very diverse level of education, right? Some know a lot, some know very little. So we always start out with the idea to be supportive, help, share what we know. In a non-advisory way, of course, we were just sharing what we experience. And I think I would say the whole metaverse NFT, trend in the past few months really changed a lot the way traditional institutions are viewing digital assets, right? I think something where the metaverse and GameFi and NFTs in general has succeeded versus cryptocurrency is marketing themselves. Right, they have managed to appeal to maybe a more emotional side of digital assets, moving away from the whole idea of Ponzi schemes and scams. So hence you have seen how quickly a bank such as HSBC, got onto Sandbox on a metaverse, right? So there is a clear difference in that. So I think it's very good to have had these metaverse, hype at the moment, which I still think it's just the beginning. Right, but that has brought a lot of interest in the traditional space. Insurance, I think they deserve sort of like a special observation on that. I think they're also trying to understand not only how they can get into the space, from a perspective of what can they offer to their clients, but also how can they craft products which are gonna help growing institutional adoption. Because one of the main challenges, one of the big questions institutions ask us is, what about insurance? What if I somehow enter and choose to allocate some assets in DeFi? What about protocol risk? What do we do? Right. So in that case, our relationship with insurances is also, to share what we know about DeFi, what we experienced, our analysis, so that they can come up in the industry and actually help institutional adoption.
Interesting. Look, on Fidelity side, it might not be easy to launch, a Bitcoin tracker in I would say traditional organization. What has been, the journey of Fidelity? What were the hurdles and the sort of aha moments?
Yeah. I had to laugh. It's been a very long journey. And so if you put things into perspective, Fidelity as a company started dabbing at Bitcoin back in 2014, and then they moved into mining, and then they developed their custody infrastructure. And only on the back of that, they started spinning off Fidelity Digital, which we are using as a custodian. They're still part of the group, but it's separate like an entity. So that's the back story. Jumping to the Bitcoin tracker, the idea circulated about 2 years ago, like end of 2019, but it was really hard to get internet traction. Now, to be fair, most of my friends have only opened up their eyes to crypto in the last 18 months. Like it was really on the back of Bitcoin surge toward the end of 2020. So I don't blame people internally to say, okay, why should we care about this? But what we saw at probably early 2021, we almost had the aha moment. We feel like we almost got there. But that, if you remember, that was also the year where ESG, sustainable investing, was gaining a lot of momentum. And at that time, investing or being even exposed or remotely connected to Bitcoin was probably one of the worst things that you could be doing, right? Because basically you are intentionally burning forest without any societal value. So, and again, there, to be fair, there was also a lack of an understanding of the potential of Bitcoin, like a new reserve currency, an internal way for simplify international transaction, or a totally new decentralized platform. And on top of that, and it's still a little bit the case from an ESG point of view, there was, and there still is, a lack of research and academic view on the topic. Very much focused on the E, on the S, and the G. It gets very subjective, I would say, and this is still an issue that needs to be resolved. So ESG almost, I would say, killed the initiative, but the voice of the client ultimately was too strong. They really wanted it. What came next was the educational hurdle or the educational hurdle, mostly internally. It's like, what are you actually buying? How can you justify to sell an asset that nobody can really price? So what we agree is to say, okay, look, we're not going to push Bitcoin on people, but we're going to focus on providing access, like a secure access, convenient access. And this access will be only providing it to inform institutional type of client. So to sum up, the hurdle was the internal challenges. How does it fit in the strategy? Operational, how do you wrap the product? And the sustainable angle. And we're not done yet. I think there's still a lot of people that are skeptical about Bitcoin and crypto in general, which I think it's healthy, right? We are an institutional investor. We would be proud on thriving on contrarian or competing views. So that makes sense. But to your question, I think it was less a aha moment, like an illumination and epiphany, like where we are doing it. It was more a whole moment, like we did it. Okay, now let's build the range around it.
Thanks for that, Luke. I was going to say, it seems that ESG really came up because of regulations, which kind of pushed it into being topic du jour last year, which is a really great segue to the next question, because I basically, do you think anything's missing from a regulatory standpoint so that, that would facilitate the adoption of crypto by TradFi? I'm talking about the larger institutions here. So Giorgia, Annabelle, what's your view on the regulatory space, and what can regulators do to facilitate the uptake or ease the friction that large institutions face with, looking at crypto assets and incorporating them into their portfolios and trading strategies? Let's start with Annabelle.
No, this is a great question, and something that I think all of us have been thinking for a long time. So for Amber, a lot of us came from the traditional finance or banking background, and now being in crypto for about more than 4 years now. So coming from a more crypto native perspective, then we're actually, what we want to do is really bridge the gap, right? How do we bridge the TradFi side into maybe the more crypto finance or DeFi, whatever else that comes after. So for us, we do face a lot of regulatory challenges in terms of, I think, a lack of clarity from a lot of the major jurisdictions in terms of how they think about crypto as an asset class. Sometimes it's classified as security, sometimes it's a commodity, sometimes it's even currency, right? It's different kinds, and we are trying our best to really going by jurisdiction by jurisdiction, applying for both maybe the traditional type of financial licenses, and as well as the crypto native licenses. I think Singapore is a good example, right, where actually the monetary authority here has been I guess relatively more progressive in terms of putting out crypto specific licenses, but it's grouped under the Payment Services Act, and there has been a bit of delay as well, which brought a lot of questioning for the players who moved here. So trying to navigate all of that and applying for both the MAS crypto license as well as the more traditional broker-dealer license in Singapore and Hong Kong and elsewhere. So I think as a firm who's very dedicated to compliance, security, and trying to bridge the world, we shoulder a lot of that burden, and we continue to do that so that a lot of the traditional financial institutions who want to start coming in, then they can easily plug into us and be able to access a lot of the blockchain-based or on-chain opportunities. But I think a lot of times we have to think about, whether all of this different rules, different classification makes sense, given that crypto is a global asset by day one. So I think, just really wanted to see how we go from there. And I think on another note, which is also very interesting, I think Giorgia again can probably provide a lot more color on this, is the first question that these institutions ask would typically be, on the custody side, right? Who's your custodian? Is this safe? How do I go about it? And I think it's great to have Hex Trust and a lot of the other custodians in the market who is also trying to bridge the infrastructure part of the things. So I think it really takes all of us, right, to really be able to build the right infrastructure, the right services layer to bridge the traditional money into crypto.
Yeah, that kind of sounds like what it is. And Giorgia, if you can, I'm going to add one more comment here, but if you could add to that too. Following on from what Annabelle said, and just from what I know around the region, it seems really that regulators are looking to like shoehorn crypto into situations that are already existing. So you've got your current Financial Services Act, license, ordinance, whatever you want to call it, around Asia. And it's almost as every individual regulator has gone, well, I have a Financial Services Act, I have something that regulates custodians, I have something that regulates broker-dealers, what Annabelle's saying. And they're just kind of like, the shoe must fit. It's kind of like that is the opportunity that they're facing. So if you could speak to that as well when you, in your response on regulatory friction, that would be useful.
Sure. Well, I think the one word that Annabelle used, which is really kind of like how I would answer in one way to the question is clarity, right? What is needed is clarity. Clarity from the regulator perspective, clarity brings comfort. And together with that, the fact that a virtual asset service providers such as custodians that aim to serve institutions should also be able to have that clarity. What license do we need? What can we apply for? Is it reasonable to apply for it? Sorry if you hear background, that's my dog, apologies for that. Are we able to easily apply for a license? Does it take 18 months? Does it take 6 months? Right. So I think there is an overall ecosystem that needs to come together in order to understand where traditional institutions come from, right? But also to sort of understand the nature of this new asset class, right? So like you said, not try to fit something that is brand new. Is a little bit as if, at the time the internet, came to be, somebody wanted to fit it into something pre-existing. No, a whole new, regulatory framework was needed for the internet, right? So at the same time, in the same way, we need to do the same, or the same needs to be done for digital assets. Right. I would also extend the thinking to include the digital asset industry from the natives perspective as well. Are we catering, or are they catering for institutional investors, institutional players? Just to give you an example, right? DeFi. DeFi is by nature something that has no KYC, right? Caters primarily for retail investors, right? And so how can and institutional investors are coming to us, they know it exists to a certain degree, and they're like, how can I get there, right? While maintaining the best practices and while being able to comply with the regulatory frameworks they need to comply with, while complying with their reporting, for example, needs. How do we do that? And it's only recently that you see a proper permission DeFi projects coming out, for example, APAC or Clearpool for that matter. So I think there is also responsibility there that is on the side of the DeFi digital asset native space. Let's think about products for institutions, products that institutions can relate to and say, understand this, right? Comes from the other side of the technology, the asset classes, but it's something I can relate to because it comes towards me, right? So it kind of like, can we all meet somewhere where we can all, walk towards? So everybody, regulations, institutions, digital asset issuers, and infrastructure as well.
If I can just jump on that, because the DeFi aspect for institutional client is a very exciting one. And it's a one that I've been looking at for quite some time. And I do appreciate that effectively some DeFi protocol are trying to put in place some channel for institutional clients, which at first I thought, yeah, that makes a lot of sense. But if you look at it and to Giorgia's point, is like, does it fit the need of an institutional client? I very much question it. Because where there is a lack of appreciation is that it's just not enough to have one channel where your client are KYC'd. Because what it means for an institutional client, if you get exposure to that, you're taking money, say, from a pension plan, for instance, or an official organization, and you need to rely on the KYC that has been produced by another entity, which is a massive deal. I mean, this is, if you think of headlines, if for some reason, I'm not going to be name names, but like if you have a chain analysis who find that one of the transaction is actually to an illicit wallet, this is like, there's a massive headline. This is like heads that are going to cut. So while there is an effort in institutionalizing this, we're still pretty far away, and it kind of relate to the topic of regulation, which is lacking.
Thank you, Luc. And then if we look at the market itself, are we seeing, enough volume as well, for institutional, adoption? Because often we see a lot of market maker being here to compensate on the OTC side from, lack of volume on regulated exchange. Maybe Luc, you can say some word about that, and maybe Annabelle as well.
Yeah, I'm not too concerned about the liquidity aspect, at least for the first few years of operation, let's say next 2 years. And the main reason is simply that I think that institutional investor like ourselves, we're going to naturally focus on the most liquid crypto and token. I don't think that anytime soon we're going to go down or the tail of token. From this point of view, the approach taken by institutional investor should be traditional to regulate the normal market. If you don't see any liquidity, or if you think that it's too niche of product to develop an offering to your client, you're just not going to touch. But what in terms of liquidity, I would say it as maybe more people coming into the space. Even if they eat the liquidity to some extent, I was still seeing that as a positive catalyst, because you're going to have more reliable valuation model. People can agree on what is the value of thing. I would imagine that not everybody is going to be diamond hands, and you're going to start having different trading or investment views or more counterparty. And one of the critical points, which is really lacking in terms of for institutional player is a deep derivative market. Because if I put my shoes back a bit more 10 years ago when I moved to Hong Kong, my job as a portfolio manager was to sell the onshore Chinese bond market to European investor. And that was a bit of a painful work for many years, until they started developing a proper derivative market. Because there is rule number one for an institutional investor is you need to be able to hedge your position. And as long as we don't have a market to do this in crypto, a developed market, I think that the adoption is going to be challenging. Maybe just there is, I said I don't have concern about liquidity, but there is one point that we discussed with Emma is there are areas of the market, of the crypto market, certain theme, like say we talk about metaverse, for instance. Now, are we going to open tomorrow a fund that is invested in token related to metaverse? There I will have issue with liquidity capability. But again, that will be also digging a little bit deeper in the top token available.
Yeah, and I generally agree with Luc's point, and I think Amber, as a market maker, I've really seen the growth too. It wasn't a $2 trillion market cap before, and when we first started there was basically no non-linear or derivatives product outside of spot and some perps or swaps. But now, right, if you look at even the options volume, it's taking out a lot, and We have Bitcoin-based, Ethereum-based, and very soon Solana-based option product coming to the market, and that really boosts out a lot of different ways that institutional players can come in and get exposure. Right? I don't necessarily need to buy spot. I could, I was actually talking to our structuring team today about having something that the traditional players are familiar with in terms of structured notes, different sort of principal protected notes and crypto linked notes in the format that they're familiar with, but we can take advantage of the higher, I call it a higher risk-free rate within the crypto markets. If you look at dollar fiat is probably yielding what, 25 basis points, probably higher soon, but compared to, you can look at maybe 8 to 10+% on USDC, for example, right? If you wrap it into the crypto format. So that gives a lot of the leeway for now to play in the structured product area. And then that's also a way to really bring a lot of institutional money in, either from sort of the family office, private wealth perspective, as well as the more institutional side of things. So that's just one area. And I think to answer your question, right, I do think liquidity is enough. And I think liquidity begets liquidity in the sense that if there's more money coming in, then market makers like ourselves will have a much bigger balance sheet to play with, right? As the industry grows, that's what we've seen over the last few years. And I believe that is the trend to continue to grow. And when it comes to the less liquid side of things, yes, maybe it started more with retail or more crypto native players. But it could be interesting, right? So what drives mass adoption? So I'm not talking about just institutions here. We look at the retail market. What drives that? Perhaps it is the NFT-based blockchain games, or maybe what we call the digital lifestyle related things that really brought everyone together within the crypto world, Web3 economy, or metaverse. And maybe that's another sort of adoption wave that will drive more liquidity in the market as well, in a reverse way. So I think there's a lot of possibilities here.
Thanks, Annabelle. Touching on what you just said, so it seems that there is liquidity and products are coming out, but then in addition to that, what are the challenges that would then need to be addressed to allow for, the allowing of more products? Because all the derivative products that you and Luke just mentioned, they're not allowed in Hong Kong, and the SFC thinks of them as, extra sophisticated, more risky, and is unlikely to allow that to come into Hong Kong. Not flagging off the SFC because this is being recorded, just stating a fact. So, what would you see as, like the main challenges or queries that would need to be addressed, to the extent that Amber, is still active in the Hong Kong market, but also through other regions where Hong Kong players would be active, so Japan, Korea, Singapore, and such like. Is there a limited market infrastructure or some sort of lack of maturity there? We have Hex Trust, and but are there other custodians? I mean, Giorgia, you can comment on your peers here, but are there other custodians, local players perhaps in local markets, that would drive adoption from retail as well as institutional? I mean, what sort of risk management tools should we be looking for? How can we grow this so that liquidity and volume then grows as well? Annabelle?
Yes, sorry, I was muted. Yeah, and then that's another very excellent question. So what we're doing right now, and in order to service our clients globally, be it institutional or retail, is really finding the jurisdictions where that are more friendly towards us, or maybe wrapping the crypto products within the traditional framework, right? So we've issued notes out of our European entities, so Jersey, Luxembourg, Switzerland, and we're licensed fully licensed in Switzerland and UK in a traditional market. So oftentimes we have to wrap it under a coupon note or e-note, something like that, to be able to distribute in the region. And I think actually from Hong Kong and Singapore perspective, a lot of the distribution channels or asset managers are actually very used to trading a lot of these European-based nodes. Right? So this is one way that kind of you have to maneuver into servicing your home base sometimes. And then on some of the other jurisdictions, it is about getting or acquiring, in our case in Japan, the right virtual asset provider license, so that we can directly service the market in a crypto native way. So that requires a lot of setup, right? So we have a massive team now just looking at sort of global compliance and legal, and also on the risk management side. So it does take a lot of people to be able to build this. But I think once we've done this, then either the institutional players or the retail players can very easily plug into our services, on-ramp in their jurisdictions, start getting the desired exposures, be it directly owning the underlying or having some synthetic exposure to it, and then and go from there. But like you said, right, I think a lot of the major challenges is one on the custodian side, which I brought up earlier, and then also I think just for them to understand crypto or understanding the crypto firms from a credit perspective, because it's completely new, right? Firms like us, a lot of us are just getting audited, right? Or we haven't done like a long history of audit history. We're not really rated, in terms of rating and all of that. So it takes a lot of time to educate the different players about, okay, what is crypto and who are we, and getting them comfortable with a lot of the setup.
And Giorgia, on your side, in terms of infrastructure issues or maturity of the market?
Sure. I would say that, we observe very different behaviors, right, across, the institutional landscape. So, for example, going from, I would say some of the most progressive requests and, that we've had. One of our institutional clients that we're running a pilot for custody of digital assets with the Union Bank of the Philippines. So they came around and requested support for AXS. For those who are not familiar with it, this is the native token of Axie Infinity, one of the top games, right, in the GameFi landscape, right, which is incredibly popular in the Philippines. So that drove, a demand from the retail space, and then they came over to us and say, "Hey guys, can you help us with this?" Right. So we go all the way from this, which is quite peculiar, quite niche of our request, to of course try to accommodate the different operating models that our clients come with that can be very different, right? So then the questions, the challenges are, infrastructure security, number one question, security, as well as flexibility. That's another very big challenge, right? They can come with fairly complex operating models, right? And they expect us as a custodian, of course, to be able to accommodate for those. And that for us is really just a process of learning, right? Understanding what the market needs, going back and just make it happen for them. Similarly, we also, as Annabelle mentioned, we also are in a constant search for the best jurisdictions, the best licenses, understanding what makes our clients feel comfortable, and also sort of communicate how we are long-term committed to institutional adoption, right? Beyond the hype, beyond the volatility, beyond any temporary, potential liquidity issue, we are there because we believe that, digital assets are here to stay. And then, institutional investors should have the possibility to comfortably access them. Another challenge, I would say is not really a challenge, but something that we have increased demand for is, services beyond custody. So custody by itself is just not good enough anymore, right? Nobody just wants to park their assets somewhere and just leave them be there. So naturally, we, as XTrust, we offer much more than just custody. So the possibility to buy and sell digital assets, as well as leverage them, getting yield, leveraging across a number of different, not only protocols, but also more conservative structured products. So that's, I wouldn't call it a challenge, it's something that we offer, and then we see a lot more demand for, so we'll definitely continue to cater for that.
Thank you, Giorgia. So I think, some of the stuff you said, like around, custody is not good enough anymore, in terms of all of the suite of services you need to cater for institutional, adoption. I can think of risk management tools, but as well, maybe, access to information, data provider, index provider, maybe actually should be more for Luc. What do you think, what should be on the list, and there, what should be more institutionalized in order, for more large banks, large asset manager to, to get there?
Yeah, actually, before going into the question, I think your point about the index provider is an interesting one, because we've been approached by multiple index provider, and I don't know if it's possible to do without them. Not that we don't like them, because they're part of the business, but part of me also would like to be able to, at least somewhere in the future, to not deal with index provider, because I think it would be a little bit of a shame if we've come all the way from crypto and we end up in a similar position where we had with traditional instruments, where you have a broad range of investors, which ultimately are only a benchmark hugger. So I don't think it's not adding a lot of value for an investor. And I think that would be hopefully the opportunity to move toward more personalization. So we talk obviously a lot of hyper personalization within Fidelity, and I would hope that digital asset can help us to get there. But back to your question. So I think in terms of infrastructure, the first for me, the first condition is the derivative market. It's not necessarily per se an infrastructure, but it's part of the infrastructure. A derivative market with debt is, for me, a critical condition for the growth of the institutional space. And when I say institutional, is going back to my earlier comment, is very much like pension fund, the large institutional client, because those are the guys that we want to see coming. Besides the derivative model, valuation model, I think we need to find a way to get to that. Linked to valuation model, there is also, and that's going to be that's an headache slash a massive business opportunity. It's going to be performance attribution models. I really don't know how we're going to get there, but look, I've been an institutional investor myself for 7 years. I still haven't seen like a nice performance attribution model simply for fixed income. When you look at combining fixed income with equity, it gets very complicated. So now your mind will be exploding when you think that suddenly you're going to have like layer one platform and utility token, and you have all this stuff with so many different drivers. So I think that's a big gap, and that's going to bite us back. And the third one we touch on, but is the regulatory framework. We very much focus on crypto, like talking about digital. I know it's a topic, but there is also the tokenized asset, which somehow will also merge. We use the same infrastructure, and ultimately, my aim in the span of my career would be to come to a point where we can offer fully diversified portfolio to our client, and not the 60-40. It's pretty sad in 2020, we're still talking about the 60-40, but you have this fully diversified portfolio. So the problem is that as long as we don't have this regulatory framework that allow us to safely approach customer, and that customer don't have the insurance that they are approached in a proper way, this might not happen. And this is I think a big issue, and it's not an easy one to solve, but clarity there is going to change dramatically the way people are able to put their saving at work and make money out of it, and that's the most important.
Thank you, Luc. Annabelle, Giorgia, do you want to say anything on top before we open to questions?
No, I think Luc summarized the pretty well. And actually, I see in the questions part, actually people are very familiar with different sort of on-chain opportunities. And I think eventually, I hope the institutions will start getting, I know there's a lot of gap there and education needed, but I do see it, it's already quite different from where we were 4 years ago, right? Where people mostly just talking about Bitcoin, but now when I go speak to some of the family offices, a lot of times the second generations are already playing with NFTs or playing with different games and very, very sophisticated on that. So I do think, you know, the digital native crowd would be able to get a lot of this much faster. And this is maybe, you know, really their future of finance. So I think, yeah, definitely very bullish in the long term. And I think all of us here are doing the right things, right? To put in the right infrastructure, the right services layer, to really cater to all segments of different clients or users.
So let's take a question from the audience. So we have, Giorgia, we have a question from a colleague of yours, from Nastya. So maybe you should answer this, but I'm happy for the rest of the floor to answer this. So the question is specifically looking at NFTs and in relation to the entire topic about the institutional adoption of crypto. So where do you see the adoption of NFTs, and what challenges and advantages do you see with this increase in adoption by institutional investors of this asset class, which at the moment is really geared towards retail investors? Open to the floor.
Well, I guess I'll jump in on this one since it comes from Nastya. So yeah, there is a trend, right? And as mentioned earlier, I think the metaverse really brought a lot of attention over to NFTs. But yes, there are very big challenges. One of them, especially for a custodian like us, right, is how to price NFTs. This is something that you know, it still needs to be tackled properly. Right. Luckily, there are quite a few different projects which are looking into that. But of course, you know, our clients, they come back and say, how do I price the, like, you know, audit, for example, right? Or a monthly statement, what do we do? Right. So we work alongside different providers and with our clients themselves to sort of go around this hurdle. Obviously, also buying NFTs for our clients, for example, that's something that was a challenge, but now it's getting better and better, we see. So they're getting more comfortable. Another you know, question mark challenge is how to provide the security of custody while enabling you know, connectivity, Web3 connectivity. Right, meaning many of these NFTs are to actually be leveraged somewhere, right? You can use them, you can connect to a marketplace if you want to put them on sale or do different things. So our clients are definitely, you know, asking how can we do this from a safe place, and that's something we also offer. So we definitely see a lot of interest, more than we expected. And it can be also from a perspective of you know, once again, leveraging these NFTs. Some you know, metaverses, for example, Sandbox, right, promise to have the possibility to rent land on that digital space. So that's something that they definitely, you know, institutional players definitely see. Okay, I have this, I want to put it out and monetize it. Right. So this is definitely something we plan to keep developing, keep offering, and welcome any institutional client to reach out to us, of course, because we're really committed to that and we believe in that space.
Thank you.
Happy to chip in on that one, and I'll take you on that, Giorgia. But I think the comment that I made about the cryptocurrency space was like, okay, you need to break it down. To some extent, I would say that's the same with NFTs. Okay, now there is very much a focus on collectible art, but tomorrow it might be intellectual property rights, it might be your dog. There might be so again, like we say, let's provide access to your client to NFTs, and then someone who is bold enough, maybe doesn't know, but it's bold enough, going to ask, but what exactly am I going to invest in? I was like, well, I don't know, whatever. There's a lot of non-fungible CPU or non-fungible things. So this is also like, I don't know yet how to package this for our clients. The collectible aspect would be the easy part. But I mean, even as Giorgia mentioned it, this is, it's the easy part, but even this easy part is super complicated. So I don't have an idea on how we're going to do this for especially for institutional clients, where we need to have a little bit more like segmentation. There's not like, you're managing the money of someone else, so there are different rules that apply, and it's not just for fun. So I'm not sure how we're going to go with that, but that's a super complicated topic, an exciting one as well.
Can I just follow up here before we go to the next audience question? Because Luke, you actually you're touching on what I was thinking. And so Giorgia, when you're saying that you're managing the NFTs for clients, I'm assuming that those are all collectibles or art related NFTs. But to Luke's point, like, is the custody infrastructure in place then? And I'm, like, whether just generally in the market, is the custody infrastructure in place for other forms of NFTs? Because we've seen, like, I've seen in the legal and regulatory space that people are looking to, use data as NFTs or use intellectual property and mint them as NFTs. So how would the institutional adoption of a broader class of NFTs work?
That's a very good question. I would say so far, yes, the range of NFTs that we have been keeping for clients is more in the art collection type of thing, and or metaverse style, right? So we haven't yet seen that type of NFTs or requests for custody of that type of NFT that you just mentioned. So if we tackle this from a purely technological perspective and from perspective of we offer custody as long as that specific standard technologically can be supported by a platform, that's that.
Okay.
Right? It's very simple. It's very simple. Then whether that specific asset needs to be used in a certain environment, so there is some type of connectivity that is needed, that's a whole different, that's a whole different conversation. But as long as we can support the network it runs on, we can support the standard and the blockchain, we can have it. So from that perspective, if you want to say, is the only, let's say, straightforward and aspect that we see in all of this. But once again, super excited to work in it, and I think I think the way forward is really to work together, like custodians, clients, digital, asset issuers, come together and find solutions to enable adoption. So very big promoters of conversing between different players in the industry, instead of maybe sometimes viewing others as competition may not be the smartest thing to do. We all need to really work together to make this grow bigger and really fulfill the potential we all believe in.
Thanks, Giorgia. So I will ask the question from Prab. Thank you, Prab. What trends are you seeing in terms of the development of more sophisticated risk management tool that institutional clients may need to manage their crypto portfolio? E.g., automated market maker in DeFi typically generates short gamma exposure, which at the moment cannot really be cost effectively hedged or achieved in any real size using the limited size of the current options market. Really precise question. I guess might go to Annabelle, knowing a bit the position of Ember.
Yeah, no, I actually love this question because I don't think it's been talked about enough. I think especially in a more sort of institutional focus. The interesting what we've seen is that, first of all, if you're talking about short gamma exposure, that's really when you are the liquidity provider yourself, right, to these AMM pools. And from what we've seen, actually, I think it's mostly the retail players who want to just be a passive LP, and they're okay, right, earning the fees and being short gamma. But on the institutional, I guess now probably more either crypto native hedge funds or some of the traditional hedge funds, they actually use this as arbitrage opportunity. So there are a lot of on-chain arbitrage opportunities where they would actually, utilize their capital and play around with it, effectively kind of earning sometimes the gamma or different sort of alpha in the market that way. But like Prab said, it is very limited at the moment from sort of the entire DEX liquidity pools, just compared to what the traditional market liquidity size or daily turnover is. But I guess to answer this question, I think the people who are short gamma, they're not really thinking about how to hedge it. So yeah.
Okay. So another business opportunity, basically.
So we actually have seen a few of the maybe more on-chain protocols. There are different combinations you can do, right? If you're a passive LP player, maybe you can. There are a lot of the on-chain options pool open, or a few others where you can partially hedge, right? Maybe not fully hedge, but partially hedge some of your positions. Or sometimes I think the LPs just want to take a view on the market. Maybe they don't think it's going to move that much, and they're happy, right, earning the fees instead. But I do think there are a lot of more innovative tools coming to the market, and more in the DeFi sense, that tackle specifically a lot of the on-chain activities. But that market and sort of the off-chain options market, they're not really effectively integrated yet, just as not just in options, right? I think in terms of other derivatives as well that we've seen. So it would be interesting to see the growth within DeFi and how it actually can, really merge together to really boost the liquidity there. But that runs into a lot of other questions like Oracle and all of that. So I think we're tackling it one piece at a time.
Thank you. Kat, you're on mute.
Sorry. So this is the last question that we have from the audience, and it's basically reflective of everything that we've talked about, with institutional adoption having picked up a lot over the last year. And knowing that we can't predict the future, but where do you see institutional adoption and the industry uptake in the next 5 years? Do we see it at 25% in crypto? Do you see it at 100% in crypto? And what pitfalls or surprises do each of you see along the journey? Start with Luke.
Yeah. So it was not precise what we understand by adoption, because if you have a little bit of exposure, I would say 100% exposure in the next 5 years. It just doesn't make sense based on historical figure not to have exposure to crypto assets, which is also the caveat in the sense that I was in this generation back in 2016 and 17, who saw that they were super smart because they were making a lot of money with ICOs, and ended up losing a ton of money, because actually we missed the point that when I was buying ETH at $300 and putting them into ICO where I was expecting to make a ton of money, I lost all this money, and the $300 now I could have done tenfold. So I hope that we're not going to have one of this moments where we look at this, and there is going to be a bit of selection, but at this 18,000 token, and actually only seeing a fraction of this number. And a lot of people left with just big losses. That's a bit of the caveat. I would expect to see a bit of that, which doesn't change the direction of traveling. Even if DeFi, someone and the regulator might manage to constrain this, the revolution in terms of method of thinking can be applied, and I think will be quickly applied by institutional clients. So it's not a loss, but adoption 100%. There will be a gap, but hopefully we are in a different part of the history now already.
Giorgia?
Sure. Picking up from what Luke said, what is adoption, what is exposure? Completely agreed, right? Definitely 100% exposure to something. We're gonna be seeing that. What is the challenge? The challenge is that what is the, let's call it, the crypto space gonna bring to us next, right? Go back before DeFi, nobody was thinking about DeFi. Then DeFi came. And then before once again, I know I said that word many times, but NFTs, metaverse, before that, nobody was thinking about it. So what is going to be the next things? For example, let's say liquid staking, right? How are institutions going to sort of deal with that or even approach that? So I think we can talk about adoption, but that needs to be sort of segmented in a way. Adoption of what? Right, and then we're going to be seeing, very different numbers there. Once again, important to mention regulations, right? That is going to be key to adoption. So, Europe seems to be moving quite a lot in that respect. Super excited to see what France is going to do. Right, they announced a lot of efforts to be placed to become the hub of crypto in Europe. So will that happen? And are we going to see like a shift where Europe is going to have like a lot of institutional adoption because of regulations? Good question. And obviously we'll be there if that happens, right? So yeah, big question mark, but I think the biggest surprises are going to come from the technology, for sure. They're going to always be ahead.
Annabelle, anything from you to finish?
No, again, agree with what they've both mentioned. I'd be actually interested to see what's the sort of exposure level already, right? Because I think if not 100% already, a lot of them are directly or indirectly exposed to it. Think about a lot of the sort of PVC funds. They already invest in a lot of the crypto companies that have direct exposure there. Or right, with more sort of the Bitcoin ETFs or other products being pushed to market, and it's very easy for institutional and retail players to start having a little bit. And I think the core of this is because the demand is there for multiple different reasons. For developed markets, because maybe the yields are starved elsewhere and they're looking to invest in an alternative asset class. And for a lot of emerging markets, it's more of a necessity than right, as an alternative to their sovereign currency. So I think the key point is that the demand is there, and how long it would take for us to really fully realize that, and that does depend on a lot of factors: infrastructure, build, regulation, of course, and in terms of the surprising things, like Giorgia saying, I think it's just endless possibility that a technology can bring to us. I think 3 years ago, when I was working on early DeFi projects, I would never imagine that, right? It will grow so quickly over the last few years, and we'll be where we are now. So I think just, I would never underestimate the crypto market in terms of the innovation that could come out. So yeah, I think maybe it's not even another 5 years, maybe the next thing might come even sooner. And I think what we believe in, so Amber, from initially being a very focused crypto finance service provider, but now what we believe in is digital wealth and digital lifestyle. As everything goes increasingly digitally, then crypto or blockchain is really just the underlying tech, underlying token economy, and that could really empower anything that we want to do or we are already doing.
Cool, thanks. Thank you all for your time. I see that we're a couple minutes over, so I apologize to the audience, but Luke, Giorgia, Annabelle, it's been such a pleasure to have you here tonight. It's been hugely insightful. Judging by the amazing audience numbers that we had, it was obviously hugely interesting to our population generally. Just a shout out to everyone here. Next month's webinar is going to focus on crypto and crime. This is available to members only. So if you're not a member of the FinTech Association, I urge you to join. Reach out to Emma and I if you'd like any more information. Thank you all for your time, and I look forward to seeing you at the next webinar. Bye all.
Thanks, guys. Bye.
Thank you, Luke, Annabelle, and Giorgia. Bye. Thank you.
Thank you so much.
Thank you. Bye.
Thank you. Good evening. Bye.